A Greek reset, the euro pops, and a diamond that has lost its shine. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Thursday, the 9th of February. Can you believe this? It's the 9th of February. The weather is fantastic here in Maryland, and also the markets seem almost unstoppable on the upside. But let's start with the markets we follow. You can see that all of our indexes, which were down, have come back. We're plus 100 on all the Dow, the NASDAQ, and the S&P. Let's start with the S&P, which is what we track usually. If we have time, we'll go to the other Dow and everything else. But here's the S&P. It just inches up, higher for the week. Our target zone there is 1360. We can put a parabolic study on there, and you can see basically the market's continuing to be above the parabolic. Our Donchian trade channels, you can see we're just edging. The trend is clearly upward, touching all the time. But nonetheless, this market is in very strong hands. It's coming from a very strong formation, and we only have to look further back here and to see just how far it's really coming. So these are obviously resistance zones up here around the 1360 to 1370 level, which is our first target zones. But nonetheless, the market does act very well. The European problem has not gone away, but it seems to be not paying so much attention to in traders' minds. So let's go to our next market. The next market we're going to be looking at is going to be, of course, silver. Silver continues to be, I'll have to scope this out a little further so you can get a better picture, but silver just sort of continues to chop around this level around, we talked about 34.50 on the upside and 33 on the downside. It's going to eventually break out of this area. I don't know which area it's going to break out to. My bet could possibly be based on our trade triangles, longer term being negative. I would say it's potentially going to be down, but it may just go sideways for a while here. It's very, very non-directional right now, if that's a right word. But our daily and weekly are positive, as you can see, from 30.18 and from 34.34. So generally speaking, this market just sort of just is moving sideways. No real strong feeling there. Same goes for gold. We'll go there right now. Gold, again, rallied up, try to test the highs. It does have the likelihood that the parabolic did kick in, so I'm not sure this is going to work for the week. We are going to see how it closes for the week. But generally speaking, I would not be surprised to see this market come under pressure sometime later today or tomorrow. So not very enthusiastic about the markets on the gold and silver, but we're in a trading range. There's a plus 60, as you can well know. And you can see that our oscillator, the Williams percent R, is kind of like a mid-range. So it's not overbought, it's not oversold, kind of like the market. It's not really going anywhere that you can get too excited about. So let's go to our next market. We will be covering other markets here, but let's go to our next market, that's copper. Before we get there, I just want to say, I don't know if you've seen this or not, but you may want to ask yourself if personal one-on-one Market Club coaching right for you. We have a lot of traders come through Market Club, enjoy the service, but they feel like they want some more. Certain trades, if you're new to the markets, you want to learn how to trade right, the correct way, give us a call. It's a free call, 877-219-1482. It's a free consultation, so it's not going to cost you anything. So just listen to what we have to say and how it could help you improve your trading in 2012. So let's go back to the market and let's look at copper. Well, copper obviously had a very big pop to the upside today. It traded as high as $399.50. Our target zone there is 4, as you well know, our first target zone, but I expect we'll go higher than that. But this is a market we've been on to for quite some time, certainly from the 375 level on the monthly, and the weekly even before that, 361. So again, the trend is your friend, continues to be positive. In the weekly, you can put the weekly in let me show you that. The weekly goes right here, and that goes back to this level here, 361. That's in November 30th of last year. This is the one thing that we recommend using filters to trade it. And in our comments today, we show you how to use these filters to trade these markets using the trade triangle. So looks very positive to me. It looks like the trend is clearly established. This is a little energy base. We're going to push this market higher. I think we could see, obviously, the 4, maybe in the 405 level hit before it's all over, at least initially. Let's see how that plays out. Next market we're looking at is crude oil. Crude oil is what we've been talking about, watching this market very carefully. Now we're looking at the April contract. and it's plus 75, so we know it's an emerging trend. The only thing that's sort of bucking the trend right now is the weekly, which could kick in as early as next week. But look, we're over 100 again right now, 100.25, and this tells me that the longer-term trade triangle of 100.27, which we've had for quite some time, which is way back here on November 16th, continues to oscillate and bear a lot of weight on this market. You see, we've had push down, no real downside activity to speak of, and this, to me, as we've talked about several times before, appears to be a large energy field. This is going to be, if we see this market break out to the upside, and it's an if at this point in time, we obviously the 102 level and the 104 level are very key. If we break over these levels, this market's going to go substantially higher and could put the kibosh on the stock market. But nonetheless, it looks like a big energy field, this whole area, starting in November, going all the way through till February. And I just think this is really something to really pay attention to. So we think that's an energy field, and I think maybe it's an R in there. I don't know. I just can't spell today. But generally speaking, it looks as though this big energy field looks like we're going to go higher. So I'm sure I'm a trader, not a English major. So let's see if we go to the next market, and that's going to be the euro dollar. Euro dollar had a big spike today with this news. Popped up, traded as high as 33.19 before coming down to 32.87. So nonetheless, this is a lot of people who have been short the euro, have been blown out because it just hasn't moved the way they expected. So a lot of this has been on short covering. Today's pop, the news came out of Greece. They're going to have some austerity measures. Whether that's ever implemented with the election that's coming up in April, I don't know. They may change the politics altogether in April. It's a whole crazy mess over there. But it's not to get worried. The markets aren't paying that much attention to Greece anymore. It's like it's just been rolling over. Yep, it's going to have to do some things, but that's not our concern right now. And remember, we talked about this before. You really want to be a lover and not a fighter. So don't fight with the market. Move with the market. And clearly the trend is up in some of these markets, then you have to go with it. So let's go to our next market. That's going to be the dollar index. The dollar index is coming down to an area where we expect it to find support around, I think, 78.30, something like that. So it's 50% retracement. And let me just scope this out. We can put the Fibonacci numbers in very easily with the MarketClub tool. Just drag it down to the lows. And you can see 78.28 is a 50% retracement. Got very close to that today, and 77.45. So I would not be surprised to see this market come down to those levels before it begins to find support and turn around. So let's see how that plays out. And remember that the dollar index is a bunch of different currencies, not just the euro. So let's take that off. Let's go to our next market. And the next market we're looking at is going to be the CRB Reuters Jeffries Index. And again, this is the other thing we're looking at when you talk about energy fields and potential inflation coming along the line. And I'm sure that Mr. Bernanke doesn't want to look at this, but this is the reality of the marketplace. And here we are. We've got our potentially double bottom. We've sketched this out before. There's our pivot point. And this also looks like a very large energy field. So this would be the energy field that we talk about, and you see I do know how to spell it, and it would seem that if we get over this 20 level, close over the 20 level, like here, I think we'll test the 25 level over 25, and then we're looking at a pretty big move somewhere up to about the 360 level on the upside, 355 to 360, which would be inflationary. So let's see how that plays out. So let's clear the screen again and go to our next market. And that's a big move today is AKAMAI Technologies. And you can see what I want to show you here is look at the move today. We're up almost 10%. And what I want to show you is our trade triangles came in just right here at 28.50. So again, a great move in this market. And you can see we caught this easily on the upside. And this is what I want to share with you, with the trade triangles. They really help you get on the right side of the market and keep you on the right side of the market. Now we have a special way of trading, of course, is using the monthlies and the weeklies, so you can get in and out of the market very easily. You're never going to trade against the trend. So you can see here, there's a buy signal right here at 33.70. It's the last buy signal we have, so you would not have missed this move. It occurred a couple of days before this move. It occurred, looks like the 6th, which is Monday. And that's an excellent, excellent catch of that little over 10% in just a couple of days using trade triangles. So again, not to belabor the point, but you may want to try one-on-one Market Club coaching. Give us a call. It's a free call, 877-219-1482. You may be surprised at just how easy it is to grasp these concepts and be successful in the marketplace. So let's go back to the charts. And you can see that's a positive for AKAMAI. And look at the next one is Teradata, and we kicked in a monthly right here at 58.89. The market's at 63 and change. Clearly, you would not have got the 58 level because it opened higher than that. But nonetheless, what I want to show you is the weekly. You would have gotten out on the weekly at 50.48. So you actually would have made money because you would have been short here from 54. You would have gone out at 50. You would have made about $4, about 8% on your money on this down move, or you would have avoided it, and you certainly wouldn't have got caught today. But today is a big day. You can see the date, February 9th. Be a buyer of this Teradata. It looks like it's going higher. So next market we're going to look at is EQUIFAX, and the symbol is EFX, trade on the NYSE. Another big day today on that market, up 4.72%. Again, the trade triangles had it correctly. And I'll put the monthlies in, and you can see we have to go back some ways, all the way back to, it looks like October 27th at 35.75. That was the buy point. And here we are at 41.75. So nice winning trade there also. So again, it's all about being disciplined and using the markets to try. Now, the big loser, this is about the diamonds that don't shine. Here it is. It's Diamond Foods, and Diamond Foods really did not do well. And let me just put, let me just get this on the screen and take that off. And let me just take the this off the screen so you'll get an idea. So here we have the markets. The monthly is short from $62 a share. It's currently trading at $23.49. Now, again, we have no idea what this company does. It doesn't really matter, but the reality is the market tells you what it wants to do. And this is the important thing to remember. If the market's going down, it doesn't matter why. The important thing is you're either out of the market or short the market. And this is what the trade triangles really shine at. If I scope this out just a little bit more, let's take that off, just a little bit more, you'll see our monthly, there's a buy, and we came in this short right here, 62. And again, we use our filters, of course, with our monthlies. You put the weeklies in here, you would have gotten that right here. And the monthlies, you would have got short at 62. You would have covered that position at 38. Nice profit. You would have maybe traded this one, maybe traded that one. You've got short. But again, this keeps you out of trouble, and that's the key thing to remember. You're not going to be going long this market at $34. That would be a cover short position. So again, it's all about timing, and it's all about being successful in the market. And this is why I think one-on-one Market Club coaching could be right for you. It may not be, but the only way you're going to find out is if you give us a call. It's a free call. It's 877-219-1482. It's a free consultation. We're not brokers, so we're not trying to get you to open an account. We just want to help you become a better trader. Hey, this is Adam Hewison for Market Club. I'll be back tomorrow, same time, same place, with my Friday update. Should be an exciting Friday because here it is. I think it's the 6th week in a row the market's been higher. Will it close higher for the week? We'll have to see. Adam Hewison, have a successful day. I'll see you tomorrow.